Hello, this is David Stone, and I'm joined today by Susan Weber for another In the Know podcast. Super excited to chat with you all today. I would say, Susan, we're kind of going to be all over the place today, a bunch of different topics that we want to cover. Welcome, Susan. Great to have you back.
Thank you. Good to be here. Yes, we do tend to cover a wide array of topics when we have these conversations, as I think conversations between us typically go. So happy to be here and can't wait to dive in.
Awesome. So I think in sticking to true form here, we'll kind of start with our traditional updates on the quarterly banking profile that the FDIC just released, and then recently issued accounting pronouncements. We'll give a real brief update on those as well. Starting with the banking profile, so we're covering quarter 2 2023 data, and in this quarter we saw that less than half, so 42.5% of all community banks reported higher net income compared to first quarter 2023. So for less than half, another great quarter, and even for those that didn't quite hit the mark, I think overall another good quarter for the banking industry. All things considered, I guess I should say. Another thing that I'll point out, I say all things considered, because net interest margins continued to drop. They dropped 10 basis points in the second quarter. So still feeling that pressure just from all the interest rate commotion that's going on throughout the industry. Then lastly, I'll mention deposit balances, another hot topic that banks have certainly been looking at very closely. And here, more than half of all community banks, so 60%, reported a decrease in deposit balances from the prior quarter. And we have a great summary where I'm pulling these stats from, available on the website. Definitely check it out. We have an interesting graph in there, deposits as a percent of total assets. And we look at this data from 2008 through today. And it's a real interesting trend where you see that spike in deposits during the pandemic, and then, a pretty quick descent, recently. So for those of you that like roller coaster rides, you'll love this graph. It's certainly been a roller coaster.
I'm not sure I would equate a sort of an amusement park, a roller coaster ride with what we'd want to see in terms of these kinds of banking things, but it definitely makes it quite an interesting time, to be in banking. Sure. I feel we've said often before, there's never a dull moment in banking, and certainly great lessons to be learned in managing these cycles.
Mm. Yeah, and one other thing I'll mention, Susan, on the deposit front, student loan repayments are kicking back in. And, I saw a stat recently that these payments are expected to be about 18 billion monthly. Monthly payments are expected to be about 18 billion. That's a big chunk of change.
That doesn't even feel like a real number.
No, I was thinking the same thing when
I can't even get my mind around
it. It's like, is that right? I had to do a double take.
Yeah.
Yeah, it doesn't feel like a real number, but it is. And, I think the concern is that this is just going to further exacerbate that deposit runoff throughout the banking industry, because likely those repayments are going to be coming from deposit balances, from saving, checking accounts. So it'll be interesting to see how that plays out and how that impacts balance sheets and asset liability management. Yeah. As well as lending too, I would say, what will the impact be on consumer spending in general now that these payments are kicking back in?
Yeah. And, of course, that'll eke out over time. So, hopefully it won't all hit all at once, but, still understanding that, that can be a heavy weight to carry once they all start kicking back in terms of the requirement. So what about the new accounting pronouncements? Anything that you're tracking and trending there?
Sure. Short answer, no.
Oh.
And what I guess I should elaborate on that a little bit. What I mean by that.
Discussion. That'll be the shortest podcast we've ever had, David.
Yeah. No, mic drop. I wish that was the case, but good news is, what I mean by no is that it was a relatively quiet quarter. Really no new ASUs or accounting standard updates relevant to financial institutions. Certainly some things in the pipeline, around, financial assets that were purchased with credit deterioration. That's still an ASU that's out in the works with the FASB. So likely more to come on that. But, aside from that, really a relatively quiet quarter. That being said, I will just provide a plug for some ASUs that still are in the pipeline, so to speak, that have been issued, that your institution will want to start considering adoption strategy. Reference rate reform, that's been a long-standing ASU that's been out there, as well as derivatives and hedging, creating that portfolio layer method. That's still out there for adoption. And what I mean by out there for adoption is that, this is effective for fiscal years beginning after December 15th, 2023. So, it's been finalized, but it hasn't been fully adopted yet by institutions. But aside from that, pretty quiet. I say pretty quiet. Of course, CECL adoption is still well underway, I would say, still kind of wrapping our heads around what that calculation looks like from a monthly, quarterly basis. So I think the reprieve on ASUs is certainly welcomed for that reason.
Absolutely. And, not to turn this into a CECL discussion, we can tune into CECL radio for that. But
Sure.
But definitely a lot of interest in what's going to happen as we get into year end and really getting some more insights into what's been happening in that space and comparatively too, right? So finding new ways to compare and contrast what's happening in the banking environment. One thing that I wanted to bring up is maybe an update on what's happening with the CFPB 1071 rule. That was something we talked about, I think, last quarter, David. And since then, there's been a case that has gone through the courts. There's been a court challenge to this, and it was really a collaborative effort among several association groups and really sort of bubbled up through Texas, where the courts provided basically a stay, right, on this implementing this 1071, CFPB 1071, but they had a caveat to it, and that was that it would be limited to the association members of those associations that collaborated on the court case, and that's not ultimately what would be desired in the banking community. And it would have this really odd structure where it only applied to some and not others, and it could introduce a lot more risk and confusion than necessary. So this is actually now bubbled up to the Supreme Court, and starting in early October, they were set to hear arguments or beginning to hear arguments on the CFPB constitutionality in general. So I would say, keep on your track of planning, but stay tuned. There may be some changes or disruptions to the path of the 1071 rule.
Sure. No, thanks for that update, Susan. And, it's certainly something we're going to continue to track, and we'll continue to report out through the In the Know podcast series and maybe even other mediums. Mm-hmm. So I guess the takeaway there is more to come.
More to come. For sure.
Another topic. So as I said at the top of this session, we're kind of going to go all over the place today and just cover a bunch of different topics real briefly. So one that I wanted to cover was AI in banking. So artificial intelligence, definitely a buzz term right now. It seems like everywhere I look, there's something on AI, not even just in the banking industry. I think I would suspect a lot of banks' customers are also seeing AI, throughout their communications as well. So it's really just ubiquitous right now. It's everywhere. But specific to banking, I think there's a lot of interesting use cases that have started to pop up. And, I think we're still in the preliminary stages as to what that may look like. But, you think about like generative AI, for instance, ChatGPT comes to mind, but there's certainly other players. What could that look like from a customer experience perspective? Could that help enhance the digital banking, services that you're offering to customers? Maybe, make your ability to respond to customers quicker in a more personalized fashion. I don't know the answers to these questions, but I think these are things that institutions are starting to think about from an external facing perspective. And then, internally, I'll mention, how do you plan to confront AI use internally? And have you started to develop policies and procedures around this use? I've definitely heard some, I guess you could say, commotion there as well as to what that may look like, what's acceptable and what's not acceptable in the workplace environment. So, a lot going on here. It's a super exciting topic. I think there's a lot that could come out of it. And, I think right now we're in a phase where we just need to make sure that we're kind of sifting through the noise and making sure that we're, making the best decisions for our institution. I think I saw a quote recently from Jamie Dimon, CEO of JP Morgan Chase, that, AI could possibly allow for a 3.5-day work week. Now that would be great, but we'll see. I guess I'm just trying to make the point, just kind of go through it with a level head.
Sure. And, I think anytime you have innovations that could lead to, future changes or balances in our lives that are welcomed, there's always that sort of, I have to put that risk manager hat on.
Yes.
And,
Yep.
Start thinking about what could go wrong in that process.
Exactly.
And I think many institutions, whether you love the concept of AI or you're skeptically optimistic about the concept of AI, or you just think, I hope I retire before that's anything I have to worry about. I do think that what's good about the banking environment is that we have a discipline around risk management, right? And so thinking about how many of these models are being built, what's feeding them, what are the limitations of what's feeding them, all of that discipline is ongoing and evolving and growing. And so I think, being really skeptical, to the sense not of blocking the technology, but being appropriately skeptical to make sure that you understand the applications to your business and that you can welcome those great innovations and changes, but also have some balance to that process.
Yeah, great point. And one last thing I'll mention on the AI front for now is, there's a lot of uncertainty around AI, and I think it, in some instances, has created a lot of anxiety too, possibly for employees, maybe even customers. But, I've certainly seen the dialogue that AI is going to eliminate jobs, for instance, and, whatever story is out there, it could create anxiety for individuals. And is that something that maybe needs to be confronted as well? That's obviously a decision for each institution to make, and management teams to make. But, does some sort of messaging need to go out just to confront, kind of the current trends in the space?
Absolutely. Well, I guess jumping gears, another sort of I don't know what to call this. It's not really an innovation, but sort of an emerging, some emerging information that we continue to track and monitor is what's happening in the environmental, social, and governance space. So ESG.
Oh, yes.
And one of the things I wanted to mention is we have been seeing and continue to see states and local governments maybe more on the state side than local, but state governments taking a position on certain especially environmental related legislation. And California just recently joined in that as well. And the governor was expected to sign a requirement that would apply to businesses doing business in California, whether they're headquartered there or not, of a certain amount of business or size, and to be compliant with certain environmental targets. the only reason I bring this up here is because that is something to be monitored and considered state by state as more are doing this. This has nothing to do with the SEC requirements that we're still expecting to be finalized this year. We know ISSB, the International Sustainability Standards Board, did this internationally earlier this year on the environmental side for disclosures for large companies. We're still waiting for the SEC here domestically to come out and say what they were going to say about it. But a lot of states are kind of taking it upon themselves to also institute this. We know closer to home, Boston, I think we may have mentioned this before, they have implemented a carbon neutral or carbon zero by 2050 requirement for buildings and things within Boston area. So anybody doing commercial credit underwriting, CRE underwriting there. 2050, it's 27 years from now. So it feels like, why would I care about this now? But, considering the average life of loans in the portfolio, maybe it's not this underwriting cycle, but it's the next one. At some point, investments are going to have to be made in a way that they haven't been made before, perhaps. And, that is something to continue to monitor and think about. I think really just more, we do tend to want to wait and address these right in the very moment that they are in front of us as humans, I think. But, I think, we have an opportunity as a banking community to really start thinking, making sure that we're continuing to monitor and track those in our geographies and keeping an eye on what that's going to mean for us in our lending and make sure we stay abreast and in keeping with that in real time.
Yeah, great point. And when we talk about environment, I know two types of risks tend to come up: transition risk versus physical risk. Mm-hmm. And I think this is a great example of one of those transition risks, a regulation that's in the pipeline that borrowers are going to need to consider to be compliant with the regulation. And there could be some pretty substantial upfront capital costs to become compliant, depending on the facts and circumstances, which, given the crunch on office space, could be a double-edged sword, I guess. Mm-hmm. Unfortunately, but I think more to come on this too. With a lot of these topics, they're kind of in their infancy in a way, but that's what we're here for. Getting these things in front of everyone and just making sure you're thinking about them.
Absolutely.
Well, thank you so much, Susan. I think that's all we have on the docket for today. And thank you so much to our listeners. It's been great providing this information to you all. And as always, if there's any questions, please don't hesitate to reach out to Susan, myself. We also have the Ask the Advisor feature on the website that can be utilized, and a bunch of great resources on the website as well. So, certainly check it out, and we look forward to continuing the conversation. Thank you very much.